Eric Mother with Mother.com. Just want to take another follow-up video on the TLT position. Now I know you already decided you are going to hold out to see whether it can bounce, and pretty much the reason was we go back to the entry. By the way, let me show a closer view here. So we're seeing this week down substantially. I mean, this is a serious pullback, of course. 142 close to 122, down about 7% this week. And we're taking a look at the possibility of holding throughout this drop and expecting a bounce. It's a risky proposition, of course, but again, the reason is coming off the lows. This was the entry in the RSI, and this is pretty much what is being tested right now. Off the lows, there was a slight attempt to break the lows that held. We've been higher since, and so we draw a line from here. Any type of uniform bounce on this line week to week tends to be a good entry point. So the idea here is the expectation or the belief that this is now where it could actually bounce. Now, the last time we held on this line was here, and now we are coming back to test this. So we are using the uniformity method as best as we can to see whether we can gauge an entry into this. We can gauge a reversal, but it's a risky proposition. Now, if I take a look at the one that you are actually short, which is a TBT, I just want to take a look at some charts here to show you how things are setting up. First and foremost, the TBT not too far off from giving major buy signal based on the MACDs and the RSI. If you take a look at this here, you can actually say this is seeming like a breakout. Now keep in mind on my charts here, just in case it looks a little bit different from yours, I'm using 34 months instead of 36. Now you can use 36, but I'm using 34 because I believe it should actually be 34 months. And the reason why I use 34 is because it's a Fibonacci series number. Just to explain where that 34 comes from. So you can use 36 months, 3 years, no big deal. I adjust this a little bit so I can have 34 months. And again, Fibonacci series number, of course, 0, 0, 1. I believe that's, well, I guess 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. I know those numbers off head. Anyway, so that's why I use that 34 month time frame. And so we can see the risk here is we could actually be trying to go against this trend line here. If it breaks out to 3-year highs, that's a major buy signal, and we are looking at the default MACD not too far off from breaking out. So here a breakout would be absolutely bullish for this instrument, which means that your short position could actually be decimated. Hope I'm saying that right. But the idea here is this is how the monthly charts looks like. It's a risk, of course, that it could play out, or it might also be reversal area. But let's take a look at the weekly. Let's go back to that. So you can see the little adjustment here between. Take a look at this adjustment. This is 34 weeks, just about to break out. If I go back to 36 weeks, you can see that the breakout is not taking place yet because of this hump. So that adjustment to 34 weeks, I think, tends to be very important as far as I'm concerned. But here we're looking at your position, and this is now the weekly chart. So we talked about the idea of holding, or you're talking about the idea of holding into next week. And what you're hoping for here is, and I know I should not use the word hope, but what you're expecting here is some type of a reversal based on where it's stalled previously. And for that we have to, let's go to the 5-year weekly, and just like the TLT, pretty much coming back to test the break level here. Actually, I can even draw it there. And since that slight warning break here, slight pullback, and then the eventual highs. The eventual highs come on the line, so that line is legit. Draw it from there, and I'll just draw it right there. And you can see what's happening here is the last time we hit that level was a reversal, and we are coming back to test that. So it really depends on how it behaves around here. Reversal, as we are expecting, a down week in the coming week or so, and confirmation of resistance here would be exactly what you want to see, which would be a reason to hold into the new week. Now let me take that off and show you something else that generally happens when stocks reverse, and it's a simple line. If you take the highs here and these highs, so what generally happens if the reversal is to take place is you're going to have uniform activity back below that line. So it could look something like this. In other words, the movement above the blue line and back below it would be with uniform activity, suggesting at the end of the day, in the coming weeks, if we get a reversal back below the blue line with uniform action, that this was a trap. So, and then you add on the previous line, you can see that this is a logical place to expect a recovery, and this is based on the sentiment and it's not based on price. And I personally think that sentiment is more important than price. It is the only reason why stocks fluctuate, because moment to moment the sentiment, the psychology, the expectations change, and so the sentiment is what we are using here to come up with the idea, maybe hold, to see whether this is reversal territory. Now let's take a look at the daily, because the daily is actually very bullish, and I'll explain that because it is above 69.1. generally speaking, it suggests that as long as it holds above 69.1 on the daily, do not expect a pullback. It's not where stocks pull back. In fact, more often than not, this is going to happen. You're going to eventually do something like this. Eventually, at some point, you're going to draw, come back, hold this line, and reverse. So you're going to have a lower high, okay, on the daily. But while that is taking place, the price is going to do something like this. So in other words, for you to form this negative divergence, prices might have to make fresh highs, and that's the risk. Now, the only way this becomes a sell signal by itself is if this is uniform action back below 69.1. In other words, rejection with uniform action above 69.1 and back below it can be a short-term sell signal, if not an important high. But again, I just want to express this because generally speaking, you don't make a high by the initial move above 69.1. As an example, take a look at this period here. You had the RSI not improving, but you had price improvement here, price improvement here, even as the RSI stayed at the same level. So you can see that even with a slight pullback here, and this starts recovering, this would suggest that you're going to see higher prices day to day. And that could actually play out. So it's a risk to hold. You're hoping, no, you're relying on the weekly chart to confirm that there could be a turnaround situation in the coming week or weeks. But we don't know that until we see it. And also here I see that on the daily, there's a trend line that has yet to be broken. RSI lows line, connecting the recent lows, connecting this recent low. So obviously until we break this, we are gonna be in an upward trend. Just keep that in mind. If you take a look at the hourly, same type analysis. Because the RSI is above 69.1, it is very hard to expect an immediate pullback. And the fact that the RSI has spent some hours above 69.1 also tells me that it should make more sense that we pull back slightly and eventually tag fresh highs. Remember that the RSI would have to make an attempt to make a higher high and fail. But while it is failing to make a higher high, in other words, while the RSI is forming negative divergence with the price improvement, you're going to see a spike in price. So ultimately here you might have to see higher price levels before you get the eventual high, if there's a high around here and a pullback. Okay, now if you take a look at the 5-minute chart, it is giving a little bit of an opportunity here. Now this explains what I'm saying perfectly. Once we spent some time above 69.1, this was not the high, this period. You can see even as the stock has been making lower lows, we've also been making higher highs, as I've been mentioning here. This is a perfect example. Lower high, but the prices went higher. Lower RSI high, but the prices went higher. And again here, lower high, but the prices are at short-term highs. So this is a perfect example of what I'm saying could happen on the hourly and on the daily. And also I need to point out here that this could also be where we start getting the pullback that affects the weekly chart. Here you can see that the RSI has been stalling on this line, suggesting that around here with this continued improvement in prices, that we can expect 5-minute to 5-minute that this could be where it stalls. So at around, let's call it 39.10, 5-minute to 5-minute, I would expect a pullback if this line is confirmed again as resistance short term. But then again, it depends on, ultimately, as we come to the conclusion of the week, what is going to determine the next major direction is this line here. As we go into the new week, this is Friday, of course, the new week will suggest that if we get a strong reversal in the RSI, then that's going to break all the daily and the hourly chart expectations for higher prices. Or it might take the entire week for this to play out. In other words, it might be until the end of the week that we see the reversal, not necessarily at the beginning of the week. And in between, and it's hard to explain, but let me try this. So in between Monday all the way to Friday, right, you could have the stock or the ETF moving to higher highs. But by Friday, it could be down for the week. So that's why I was saying it is very important we give our instruments this aspect of trading. This variable needs to be there in abundance. Otherwise, without this, if you're always pressed for immediate action, it's hard to time some of these things. So yes, hold on with the idea that as we come into the new week, as the new week begins, we might have an idea of whether we are going to get a reversal on this line or not. By the way, one more last observation. Whenever you have a critical level that you're trying to see whether it's going to work, it's always good to test it, I guess, historically by going backwards. So the line we are looking at right there, we can test this by going backwards. And what I'm trying to say here is a good method should work in the future and should have worked in the past. That's how you know that the line is legit. And you can see here without any adjustment, we stalled here in 2011 for the highs there. And we stalled here again in 2009 for the highs there. In fact, this is a weekly chart going back to 09. If I take a look at all data weekly, you can see that that line has been stalling this instrument ever since it started trading. So it's not like you're holding based on hope, quote unquote. You're holding based on a serious line that is gonna be tested. If it can stay above this red line, anything above the red line, then it's the stock or the ETF is entering a phase it has never been before, which would be bullish for it. Otherwise, resistance on this red line would suggest that the next major direction for the instrument could actually end up being lower. Eric Mwathe, Mwathe.com. Of course, I'll keep you posted. Good luck. Peace and blessings. I am out.